Hello everyone, and welcome to this week's update on my £100,000 investment portfolio. It's been an interesting week in the markets, and I'm here to break down what happened and what moves I made. Remember, this isn't financial advice, just a look into my personal journey. The portfolio is down about £800 this week. That's a bit of a dip, but it's important to keep things in perspective. The markets go up and down, and short-term fluctuations are normal. The bigger picture is more encouraging. Over the past month, the portfolio is actually up a healthy £1,900. That's a great reminder that investing is a long game. It's easy to get caught up in the day-to-day noise, but I'm focused on the long term. This week's dip hasn't changed my overall strategy. One of the best things about investing for income is receiving those regular dividend payments. This week, 3 companies in my portfolio paid out: JP Morgan, Gladstone Capital, and BA Tobacco. JP Morgan, a global financial giant, pays a quarterly dividend, meaning I receive income from them 4 times a year. Their current annual yield is around 3%, which is a decent return considering their size and stability. Gladstone Capital, a business development company, is another regular payer. They distribute dividends monthly, providing a more frequent income stream. Their current yield is a juicy 8%, reflecting their higher risk, higher reward profile. BA Tobacco, a global tobacco company, pays out dividends twice a year. Their current yield sits around 7%, offering a solid income stream for those comfortable with the ethical considerations of investing in the tobacco industry. When it comes to building a successful portfolio, I believe in a balanced approach that combines growth stocks with high dividend-paying companies. Growth stocks, as the name suggests, are companies that are expected to increase their earnings and revenue at a faster rate than the overall market. Think of tech giants like Apple or Tesla. These companies often reinvest their profits back into their businesses to fuel further growth, so they may not pay high dividends. However, their potential for capital appreciation can significantly boost your portfolio's value over time. On the other hand, high dividend-paying stocks provide a steady stream of income, which can be reinvested to buy more shares and accelerate your wealth-building journey. It's all about finding the right balance for your individual goals and risk tolerance. Section 4. Reinvesting for the future. This week, I reinvested the dividends I received into 3 companies: Arbor Realty Trust, Gladstone Capital, and Alibaba ADR. Reinvesting dividends is a powerful way to compound your returns over time. Arbor Realty Trust is a real estate investment trust, or REIT, that specializes in financing multifamily and commercial properties. They offer a high dividend yield, currently around 10%, making them an attractive option for income-focused investors. Gladstone Capital, as mentioned earlier, also boasts a high yield and monthly dividend payments, making it a good fit for my dividend reinvestment strategy. Alibaba, the Chinese e-commerce giant, is a growth play within my portfolio. While they don't currently pay a dividend, their long-term growth potential and dominance in the Chinese market make them a worthwhile investment for capital appreciation. Section 5. Targeting dividend deserts. One of my current investment goals is to build up my holdings in companies that pay dividends in January, July, and October. These months are typically considered dividend deserts because fewer companies distribute dividends during these periods. By strategically investing in companies that pay out during these months, I can create a more consistent monthly income stream from my portfolio. 2 companies I'm currently accumulating are Altria and Vici Properties. Altria, another tobacco giant, pays a hefty dividend and has a history of increasing its payouts over time. Vici Properties, a REIT that owns a portfolio of casino properties, offers a solid dividend yield and exposure to a unique sector. Section 6. The importance of a dividend calendar. To keep track of all these dividend payments, I use a dividend calendar. This handy tool allows me to see at a glance when my dividends are expected to arrive and from which companies. This helps me plan my finances more effectively and ensures I'm aware of any changes to dividend payment schedules. If you're serious about dividend investing, I highly recommend using a dividend calendar. That's all for this week's update. Remember, this is just a glimpse into my personal investment journey, and it's not financial advice. I encourage you to do your own research and consider your own financial circumstances before making any investment decisions. Thanks for following along.